Welcome to the Deep Dive by TalkTickers.
Yes, where we break down the earnings call so you don't have to.
Exactly. And today we're tackling the Trip.com Group first quarter 2025 call.
That's right. We've gone through it, pulled out the key bits, the numbers, the strategy discussion.
Our goal, as always, is to get you up to speed quickly, what happened, why it happened, and what they're thinking comes next. So let's kick off with the main results for Q1 2025.
Okay, so financially, net revenue landed at RMB 13.8 billion.
And how does that stack up?
Pretty solid. That's up 16% compared to Q1 last year and actually up 9% from the previous quarter, Q4.
Okay, nice top line growth. What about profitability?
Adjusted EBITDA, which gives a good sense of operational profit, with RMB 4.2 billion. That's a 7% increase year over year. They flagged this as continued improvement in efficiency.
Got it. And the bottom line per share?
Non-GAAP diluted earnings per share, that came out to RMB 5.906, or US 82 cents per ADS.
So the overall message from them was basically positive momentum, resilient demand.
Pretty much. Solid momentum, demand holding up across the different travel areas they're in.
All right, let's dig into what's driving that. They mentioned the whole travel industry is looking pretty strong in 2025. What's behind that?
Yeah, they pointed to a few things. Consumer confidence seems generally okay. People still really want to travel. That demand is resilient. And crucially, favorable government policies are helping a lot.
Especially the inbound China stuff, I imagine.
We'll definitely get to that.
Yeah.
But yeah, policies are a big factor.
And how's Trip.com positioned itself in this environment?
They talked a lot about their diversified presence. Their mature markets, but also pushing into emerging ones.
Trying to balance things out.
Exactly. Build a balanced portfolio, catch growth wherever it's happening, maybe hedge some risks.
Okay, smart. Let's break down the segments then. How did the international side perform?
International was a real bright spot. Bookings on their international OTA platform jumped over 60% year over year.
60%. Wow. Any particular region driving that?
APEC. Asia Pacific remains a major growth engine for them internationally.
And how are people booking internationally? Still desktop or mostly mobile?
Oh, overwhelmingly mobile. It's contributing about 70% of those international bookings.
Makes sense.
Their international air business is also growing fast. And interestingly, these international parts were the main reason their overall package tour revenue grew 7% year over year.
So international travelers are booking packages too, not just flights and hotels separately.
Seems like it, yeah. It's fueling that package growth. Now flipping over to inbound travel into China.
Right. This was the one that really jumped out. They said it surged, 100%?
Yeah, approximately 100% year-over-year growth on their platform in Q1. That's huge.
And much faster than the overall national growth in arrivals.
Significantly faster. National arrivals were up maybe 40% year-over-year, and a key stat there, about 75% of those national arrivals came from regions with those new visa-free policies.
Okay, so that visa-free expansion is clearly having a massive impact. Did they break down hotel bookings from those regions?
They did. Hotel bookings just from key visa-free countries in APEC surged over 240% year over year.
240%. Just shows you, make it easier to come and they will.
Absolutely. And what's more, they said this inbound segment actually performs better than others on conversion rates and cross-selling.
Meaning these visitors are more likely to book and book more things once they're on the platform.
Exactly. They seem to be sort of higher value or at least more easily converted customers.
That's a really important point. Beyond just the main visa-free policy, were there other policy tailwinds they mentioned?
Yeah, a couple. The 240-hour visa-free transit policy now covers 54 countries, and they've expanded the eligible entry and exit ports. Now it's 60 ports across 24 provinces.
Making those longer stopovers much easier.
Right. And they also flagged a new instant VAT refund policy at certain stores. Makes shopping easier and maybe more attractive for tourists.
So policies are helping, but what is Trip.com itself doing to make things smoother for international visitors? Because visiting China can still have some hurdles, right? Payments, language.
For sure. They're tackling that. They launched free city tours for transit travelers in Shanghai and Beijing, which is a nice touch.
Yeah.
And they're upgrading their physical stores into multilingual service centers. So you can go there for help, consultations, payment support, things like that, trying to ease those friction points.
Good stuff. Okay, policy and company efforts boosting inbound. What about the other side-eyed Chinese travelers going outbound?
That's sustained, steady growth. Overall, cross-border flight capacity in Q1 got back to about 83% of pre-pandemic levels.
Okay, so capacity is recovering, but not quite there yet. How did Trip.com do compared to that 83%?
This is where they really shine. Their own outbound hotel and air bookings are already over 120% of 2019 levels.
Wow, so they're grabbing a much bigger piece of that recovering pie.
Yeah, outperforming the market recovery by like 30 to 40 percentage points. Pretty significant share gain. Long haul was strong too. Places like Europe saw good growth.
Any update on when that flight capacity might fully recover? Like back to 100%?
They mentioned the SIAC, the Chinese Aviation Authority forecast. It predicts capacity will get over 90% by the end of this year, 2025.
So still more room for the overall market to grow, which could help Trip.com even more.
Potentially, yeah.
Yeah.
Given their current outperformance.
Okay, let's bring it back home. Domestic travel within China, still strong.
Yep, remained robust. Hotel bookings kept growing double digits year over year in Q1. So that appetite for, exploring domestically is still there.
And corporate travel, how did that segment fare?
Revenue there was up 12% year over year in Q1. It was down a bit from Q4, but they said that was just normal seasonality for business trips.
Right. Q4 usually has more year-end stuff.
Exactly. They said overall, while it's tied to the macro economy, demand looks stable right now.
Did they say anything about what companies are actually spending?
Average spending per corporate user was pretty steady year over year. And they did a survey recently. Over 90% of their corporate clients expect their travel budget for 2025 to either grow or stay the same, both domestic and international.
That's a pretty bullish signal from businesses themselves.
Yeah, suggests underlying confidence there. They also spent some time talking about specific traveler groups they're targeting.
Ah, right. The silver generation and younger travelers. Let's start with the seniors, the silver generation. The growth there sounded incredible.
It really did. They called them an emerging, vibrant force. Both the number of users aged 60 plus and the GMV, the total spending from that group grew 100% year over year in Q1.
Doubled in a year. That's huge. What are they doing specifically for older travelers?
A lot, actually. They've created over 7,000 tailored travel products. They've partnered with 2,000 hotels that have senior-friendly features and have like 4,000 specific hotel packages.
So really curating the options.
Yeah, and providing one-on-one customer support, which is probably key. They're even using things like short-form drama series for marketing to this group. Plus, policy is encouraging more senior-friendly products too.
Interesting marketing approach. Now, the other end, younger travelers. What's the trend there?
It's all about experiences, entertainment plus travel. Think music festivals, theme tours, destination events.
And the growth there was even higher, wasn't it?
Astronomical. Revenue from those entertainment plus travel type products was up over 400% year over year in Q1.
400%. It really shows that shift, right? Travel isn't just transport and a bed anymore, especially for younger people.
Totally. It's about the immersive experience. So Trip.com is curating niche offerings around concerts, anime, sports, whatever, brings people together for an event.
Okay, switching gears to tech. AI is obviously huge everywhere. How is Trip.com using it?
They positioned it as like a cornerstone of their long-term strategy. It's about making the user experience better and making booking and everything after booking much smoother.
How so? Any examples?
Well, their AI agent, Trip Genie, users are spending about 50% longer in sessions with it, on average.
It's just people are actually finding it useful for planning.
Seems that way. And for post-sales stuff like questions or changes, AI chatbots and self-service tools are handling over 80% of inquiries now.
Wow, 80%. That must free up human agents quite a bit.
You'd think so. Offers 24/7 support too. They also talked a bit about vertical AI versus general AI in travel.
What's their take there?
Basically, vertical agents like theirs have the advantage of proprietary data and direct integration for booking. General AI might be good for broad questions, but often still relies on OTAs like Trip.com to actually complete the booking. Their goal is just to be the most efficient, reliable, one-stop platform, using AI to enhance that.
Makes sense. What about the competition, especially in China? They describe the domestic market as rationalized. What does that imply?
Yeah, rationalized. It kind of suggests maybe less crazy price wars, perhaps, more focus on value and service instead of just undercutting each other.
And in that kind of market, what are Trip.com's strengths?
They really hammered home their loyalty program. Said 80% of revenue comes from existing customers, which is huge.
80%? That's sticky.
Very. And they use that membership scheme to help partners differentiate too. Plus, their one-stop platform, using AI for cross-selling, their customer service, they see that as a global high standard 2007, and just having a really good, widely used app in Asia. They feel more volume just makes them stronger.
Okay, let's talk costs. How did expenses look in Q1?
Right. Product development and G&A expenses, general and admin, were up year over year 14% and 12% respectively, mostly due to personnel costs, so likely investing in people.
But sales and marketing?
That was down quarter over quarter, about 11%, which is normal seasonality after Q4 holidays. But it was up 30% compared to Q1 last year.
30% jump year over year. Why so high?
They said it was due to heightened marketing efforts, basically pushing for business expansion. But they were clear that the ROI, the return on that spending, is meeting their targets. The long-term game is efficiency, driving direct mobile traffic, cross-selling, building that loyalty we talked about.
Got it. They also mentioned some social responsibility stuff.
Briefly, yeah. Things like building country retreats for rural revitalization, their global SOS program for crisis help. They mentioned the Myanmar earthquake. And an internal policy, giving extra paid leave to employees with kids under 18.
That's interesting, promoting work-life balance and maybe encouraging their own staff to travel more.
Kind of aligns with their business, right?
Yeah. Okay, looking ahead slightly, they gave some hints about Q2 based on the Labor Day holiday in China. How did that perform?
Look pretty strong. Suggested leisure demand is holding up really well into Q2. Domestic hotel bookings were up over 20% year over year during the holiday.
And cross-border?
Cross-border bookings grew around 30% year over year. And that inbound surge continued up about 150% year over year on their platform during Labor Day.
Wow. Inbound still on fire. What about prices during the holiday? Q1 saw some hotel price weakness, right?
Right. Domestic air prices were actually up year over year during Labor Day. And domestic hotel prices were getting close to last year's levels. So yeah, a definite improvement in stabilization compared to Q1 trends.
Did they elaborate on those Q1 hotel price trends? ADRs, I think?
Yeah, hotel average daily rates, ADRs. They confirmed it was a high single-digit decrease year over year in Q1. But like we just said, that decline narrowed a lot in Q2, prices stabilized, and it was only a low single-digit drop during Labor Day itself.
What's driving that stabilization? Supply catching up?
Sort of.
Yeah.
Supplier availability, the room supply, was up high single digits year over year in Q1. Fastest growth was in mid to upper range hotels.
Yeah.
But crucially, the fastest demand growth was also in that same segment.
Ah, so demand is meeting the new supply in those tiers.
Exactly. They expect demand to keep rising and supply growth to normalize, which should help keep prices stable going forward.
Okay. And financially, how are they looking cash-wise?
Extremely healthy. They ended Q1 with RMB 92.9 billion in cash. That's about US $12.8 billion.
That's a huge war chest, gives them tons of flexibility.
Definitely. And they're putting some of it to work, returning capital to shareholders.
Right, the buybacks. How much have they done?
As of the call, they had repurchased about US $84 million in shares. The board had approved a $600 million program total. And they're also planning to propose a separate buyback for their Hong Kong listing.
Do they seem committed to keep doing this? Dividends too?
Very much so. They talked about a firm commitment to capital return. That includes a planned $200 million cash dividend for 2025. And importantly, they said they intend to step up the buybacks when the market provides opportunities.
Interesting phrasing. We might come back to that. Okay, I think that covers the core details from the call really well. All right, let's transition. Now for our regular segment. This is not financial advice. Everything here is purely for informational and entertainment purposes. Seriously, don't base any trades on this. Talk to a professional.
Absolutely. Okay, so playing with the themes from the call, you've got that cross-border flight capacity from China. It was 83% recovered in Q1, expected to top 90% by year end. That's a decent acceleration.
Right, and Trip.com is already outperforming that market recovery significantly.
Exactly. So a hypothetical, maybe outrageous idea could be built around that acceleration. You might think about, say, long-dated call options on Trip.com group, maybe slightly out of the money calls, betting that the market hasn't fully priced in both the capacity ramp-up and Trip.com's continued share gains.
Okay, so a bullish bet on Trip.com leveraging that recovery. How might you fund that, hypothetically?
Well, playing the relative strength angle, you might consider selling put spreads on a different regional travel player, maybe one that's less directly plugged into that specific China outbound recovery story. So you're betting on Trip.com's relative outperformance against a competitor.
Okay, that's definitely a structured idea playing on the call's themes. But again, folks, this is just a thought experiment, purely illustrative, not a recommendation.
Not at all. So let's quickly recap the key takeaways from the Trip.com Q1 call.
Yeah. Definitely strong quarter overall. Solid revenue growth, driven by resilient demand, improving consumer confidence, and those helpful policy changes.
Inbound travel into China was the absolute standout performer, massive growth fueled by visa changes, and Trip.com's own efforts to make visiting easier.
Outbound and general international business also strong, with Trip.com really outpacing the market recovery in outbound travel from China. That's a key point.
Strategic moves in AI are paying off, improving the user experience, making things more efficient, and their focus on specific groups like the silver generation and younger, experience-seeking travelers is yielding really impressive growth.
Domestically, the competitive scene seems more rational, allowing Trip.com to leverage its strengths. That huge loyalty base, the one-stop platform, good service, AI cross-selling.
Costs are up mainly due to investing in people and marketing for expansion, but they're focused on ROI and long-term efficiency.
And the early Q2 signs from the Labor Day holiday look positive. Continued strong demand, especially inbound, and stabilizing hotel prices. Momentum seems intact.
And finally, they're sitting on a mountain of cash and are clearly committed to returning capital via dividends and buybacks, stating they'll ramp up buybacks when market conditions are right.
Okay, one last reminder. This whole deep dive is based on the information Trip.com group shared in their Q1 2025 earnings call. It's for your information only, not financial advice. Please do your own research, talk to a qualified advisor.
Definitely. And maybe a final thought to leave you with, picking up on that buyback comment. They explicitly said they'll step up buybacks when the market provides more opportunities.
Right.
What does that signal about how management thinks? Could it mean that market dips, periods of volatility where the stock price might fall, are actually seen internally as the best times to buy back shares more aggressively? Does it hint at their view of intrinsic value versus whatever the market price is at that moment?
Yeah. That's an interesting angle. Food for thought, definitely. We'd love to hear what you think about this deep dive. Let us know your thoughts and questions. Thanks for tuning in to Talk Tickers.